This is Matt from InvestiQuant. Today is Tuesday, February 23rd, 2021. Yesterday, we saw the markets gap down sizably. They ended up rallying throughout the middle of the day, but gave up all of the gains, returning back to around the opening print where they ended up closing. In doing so, they have triggered what is considered an oversold reading on the 2-day RSI. So I figured we would take a look at that this morning here in Discover. I'm going to load all four instruments here. And we're going to look at a setup based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, in the overnight session, we have continued lower after yesterday's week close. So I'm going to go ahead and click gap down in the gap direction here from the opening filters to add a little bit more context to this pattern. Next, I'm going to go to the indicators section, and I'm going to grab that oversold reading. I'm going to grab it from the active today section, which is the very top option. 2-day RSI less than 5. That comes from the overbought, oversold category here. I'm also going to go ahead and add that we are below a 10 and above a 200-day simple moving average. So this shows that we're getting an oversold reading in what is still generally a bullish market environment. And then lastly, I'm going to click view results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you open lower than the prior day close, and the prior day triggered an oversold reading in the 2-day RSI. Historically, this pattern has taken place 39 times in the S&P, 49 in the NASDAQ, 57 in the Dow, and 26 times in the Russell, and that's dating back to 2003. And looking at the win rates on these, they are all neutral to a touch weak. So the S&P is coming in at 49%, so that's a pretty neutral reading. The NASDAQ is a little bit weaker here at 43%. The Dow fairly neutral at 47%, and the Russell pretty neutral as well at about 54%. So the win rates aren't very strong in either direction following this oversold pattern. Now, if we look at the average win and average loss, you can see the average loss is larger than the average win in the S&P. That is not the case in the NASDAQ. They're very similar in size there. They're very similar in size for the Dow. And then the Russell, the average win is larger than the average loss. So this oversold pattern with a gap down is not really showing much of a bias at all. Oftentimes you'll think this type of pattern would lead to a bounce, but in this scenario, we're not seeing strong stats to indicate that that has historically been the case. It's just mixed here. So hopefully you found that helpful. Good luck, and we'll see you next time.